Alrighty, thanks everyone for joining our masterclass session and navigating the cost of living world. My name's Phil, CEO of First Nations Foundation, and I'm going to be hosting this panel discussion that we have today. Before we get underway with our conversation, I just want to acknowledge country, acknowledge traditional owners of the lands that we're all on today, pay respects to elders past and present, and also acknowledge that it's 50-year anniversary of the Aboriginal 10 Embassy movement. Started in Canberra in 1972, and for us Aboriginal people, that's been a real pinnacle movement in terms of progressing land rights and a whole heap of other social justice issues. So I think it's really important to acknowledge the 50-year anniversary of the Aboriginal 10 Embassy. For us at First Nations Foundation, we do financial literacy education for community right across Australia. So we're going to have some links in the comments for some of our training if you followers want to learn a bit more detail around managing money, savings and budgeting. But the reason we're here today is to navigating the crazy world that we're in at the moment. Everything seems to be going up, probably except my stock portfolio, but that's another conversation. And we've got a panel together here from Finder, and we're going to have a really good conversation, pretty laid back, sort of informal, but also really, really insightful at the same time. On the panel today, I've got Sarah Megaston, who's Head of Editorial and TV Spokesperson at Finder. Got Taylor Blackburn, Head of Comms and TV Spokesperson for Finder. And Mariam Gumbaji, Senior Utilities Writer at Finder. Not sure I got that last name right. I pronounced it as...
Nah, you got it right.
Beautiful. So, guys, welcome.
Welcome. Thanks for having us.
Not a problem. Looking forward to this. And yeah, I've got a few questions and we may open it up to a Q&A for people towards the end if you're happy to freestyle a little bit. But if we're going to kick things off, I'm going to keep it in its most simplest form. As I said at the top of things, top of the session, prices are going up. We're talking about electricity, interest rates, everything. What on earth's going on? what does all this mean? I think Taylor, I might flip to you. What's happening? What is inflation?
Yeah, no, great. Well, I think first we want to. I know you've done a lovely acknowledgement of country. We want to do that here as well. We're on the Gadigal lands, the Eora Nation, and always has been, always will be. I think you said it much nicer than I did. But yeah, cost of living is the talk of everything right now. And you can, you hear about inflation. What does that mean? Well, what it means is everything from fuel prices to vegetables to your energy bill is on the way up. And but we're still generally making the same amount of money. So when you think of inflation, you can think of a balloon getting bigger that you still have to fill. And if you're not getting paid more, then it's going to take you more of what you earn to fill that up.
Is there something that's led to that balloon getting bigger? Is it because it always seems to have been? I think professionals say 2 to 3% maybe per year, but far out, it's gotten out of hand in the last 12 months in particular.
Yeah, well, a little bit of inflation's okay. I mean, that's kind of what you want to, because banks are borrowing and lending money, and so you want there to be a little bit of inflation, just as business happens. And that's what the Reserve Bank of Australia, the RBA, is trying to do every month when they meet to set what the cash rate will be, what the lending rate will be. They're trying to keep inflation low, but have a little bit of it. And so when it gets out of hand, like it has just recently, that's why we've seen almost every month for the last 6 months, we've seen a cash rate rise. And what that does is it helps tamp down inflation, hopefully, but it also means the cost of borrowing becomes more expensive. So on top of the fuel prices, petrol prices, and the energy prices and food prices, we're also seeing a lot of pain when it comes to housing.
Yeah. Okay. So the RBA rate rise, just as a really base summary of economics, that's designed to get inflation down, have people spend less money and pay down debt rather than going out and buying things at the shops and consuming.
That's right. And when the rates dropped a bunch right after COVID and lockdowns, that was done to ensure that money could keep being spent and that people would have easier access to credit at a lower rate. But the kind of the knock-on effect of that is now, it's kind of time to pay the piper. And when it comes to the economy, it's not always as easy to control as people in charge like to think.
Yeah, okay. Bit of the COVID hangover, I guess,
Yes, that's right.
Now, Mariam, you've niched in your content expertise into utilities. Energy's going insane. I think I heard the other day that is expecting another 35% increase. I know it was one of Labor's election promises to keep energy down. Can you explain why that's sort of going up?
Yeah, I could nerd about this for hours, but I'll try to quickly recap what's happened this year that's already led to rising energy prices, and the trend's going to continue for what's predicted to be 2 more years at the very least. So you've seen the war in Ukraine lead to sanctions on Russia's exports on coal and gas. That's increased the prices of these 2 commodities and had a ripple effect around the world. Then you've got really aging power plants here, coal power plants here in Australia that we've seen have had a few outages as well. There's been an increase in demand for energy during the colder than expected winter months as well. And as a result of all of this, the energy regulator passed up to an 18% price increase in July. This was then fed to the consumers through their energy providers. We've seen a few energy providers also shut up shop because they haven't been able to keep up with costs. And as a result, energy prices have been going up. Now, unfortunately, we're still going to be in what I've been referring to as an energy storm, just because Australia is racing towards net zero targets. And the transition to renewable energy is going to be very costly. So before your bills get cheaper, they're going to get more expensive.
That is a wild mix of things happening at one time. We've got cold winters, we've got sanctions over in Europe, we've got competitors decreasing, which increases the price, and it's all just, boiled over into this one point of expensiveness. It's
a lot of factors in play, but keeping fingers crossed we move to renewable energy ASAP.
Sarah, we're going to go to you for hopefully some insight as to how long this will last. Is what's the normal look like after this? Are we just going to live in
the normal
10% cost of living afterwards?
Yes, I mean, this, I guess the good news is that this is quite an unusual time period. It is really unusual for all of these things to happen at once, and for us to have so much price pressure from every angle happening all at the same time. And in terms of energy, as Mariam touched on a number of the reasons why we're seeing energy prices go up. And like my bill came in and it's 17% up, and that's such a bitter pill to swallow, to pay that much more for the same thing and get nothing extra for it. And we're kind of having that happen across the board. So it's like we've already talked about, it's home loans and it's petrol and it's energy and it's groceries, and it's really hard to escape it. So yes, it has been a really difficult year, and all of these things have happened at once. The inflation rate is sitting at around 6% at the moment, and the goal is to get that into a more manageable 2 to 3% range. And until that happens, we're going to see the RBA continue to move with the rate rises. So we had a 0.25% increase this month, which shows that it's moderating a little bit. We had a run of all these 0.5% increases, which means your mortgage went up 0.5%, which is such a big jump. This month it was 0.25%, which is perhaps a sign that we're going to have a more slow run of increases coming up. There was even some talk that next year we might see that stabilize, and actually rates might start to come down again, but it's really too early to say exactly what's going to happen, because everyone's reacting based on the latest data they've got, and it's kind of constantly changing. But I think probably the good news is, or the only good news I can share, is that it's not going to go on indefinitely. We're not going to see prices rise continually for everything month on month on month in an indefinite way. It will come to a bit of a stabilization point eventually. It's just a matter of figuring out how to manage and make your finances work while we're in this really high inflammatory environment.
Well, that's a good point, because I guess that's the next question. We've kind of covered why and how we got to there. So how do we navigate this with expenses and just trying to make ends meet, really.
Yeah, it's really tough because it's like we've kind of already said, it's just everything. There's nothing that you can just go, oh, well, at least, petrol prices are low, or at least, I can manage my energy. It's like everything is going up, which is really hard. So the first thing we always recommend is to, as difficult as it might be, like get your head out of the sand and really look at what your life costs you, just to get an understanding of where everything sits. And the good news and what we're really kind of excited about and proud about what we do at Finder is we help people pay less for all of these things. So you have the opportunity to compare what you're already paying for and see if you can get a bit better deal on it. One of the benefits of working here is it's always top of mind for me. So I'm comparing my insurance and home loans and things. I think since I've been at Finder, I've changed my home loan twice. I've changed my car insurance. I've changed my house insurance. I'm always seeing, kind of these reminders of how important it is to check and compare and see if you're paying too much. And it's really easy to do. And in fact, companies rely on that. They want you to buy their product, whether it's insurance or energy or, whatever it might be. They want you to buy it and they just want you to have it indefinitely and not check in and see if you're still getting the best deal. So the very best, advice that I would give people, the place to start is to look at your bank statement or your credit card statement, however you pay for things, write out an itemized list of all of your bills and everything that you spend. And then look to find a better deal on all of them. And it's a really powerful way to kind of unlock so much extra money in your budget because there's almost always a better deal out there.
And just to jump on that, actually, it's you normally set and forget about your bills, so mobile, broadband, energy, but comparing every 6 months is actually super beneficial. For example, you'll have your internet plan, you'll have sign up deals for 6 months, and then the discounted rate goes up, but then you can jump onto the next one. So just making sure you start comparing every 6 to 12 months.
Yeah, I think just to add on to that, it's loyalty really doesn't pay when it comes to your financial products. And as much as great as it is with your friends and family, it's not a great way to buy insurance or any kind of financial product.
So how's that process? You ring up your bank and say, I need a better rate on my mortgage. You ring up utility provider.
There's actually a couple ways to go with it. I mean, you can start with looking at what the best rates are out there. But as Sarah said, like first you have to know what you're paying. So what rate are you paying? How much are you paying a month for your bill, whether it's your phone bill or your internet bill or what have you. And then you can start to look at the other options out there. So it's almost like you're constantly on the dating prowl. So for some of us that's been a long time away. But when it comes to these products, there's always another better offer, and a lot of times it's for the person who's willing to switch and not have their head in the sand and just go, oh well, I'm with the same bank that my parents were with, and I'm sure it'll be all right.
And it's also like, I know we're making it sound a bit like homework and like you've got to do a lot of work, but it's also surprisingly easy to do this once you start doing it. Like I have put things off before. My home insurance is a really good example. I put it off for about 2 years. The premium kept creeping up and I just kept it on my list. I've got to compare. I've got to change that. Finally, this year, my premium went up $1,000, which was a pain point I couldn't live with anymore. And I went, okay, I really need to compare. And I found another policy. It took me an hour. I just literally, went onto the Finder site, compared 6 different policies. I thought that gives me a good range. And I compared it and I found a policy that was $1,430 cheaper. So I was then kicking myself a little bit like, oh man, I could have been saving this money for ages if I just pulled my figure out. So one thing that I do is once you kind of get that full list, as Mariam said, try to do it every 6 months, but I try to kind of make it fun or reward myself because no one is excited about the idea of sitting down and comparing all their bills. So I tend to try to make it a bit fun by like saying, okay, this, I'm going to spend 3 hours on that this morning, but then I'm going to reward myself with, lunch with a friend, or I'm going to go get a manicure or something, so that I'm kind of making it something that I'm going to look forward to rather than something that just sits on the to-do list and, gets flicked off again and again and again.
Yeah, okay, there's a few good points because I know, the concept of ringing up and talking to another human, let alone in the finance world, isn't overly appealing. You'd almost rather pay not to do that. But you said you saved $1,400 after 1 hour. It was a $1,400 hour essentially.
Exactly. Best hourly rate I've ever earned.
Yeah, that's phenomenal. And And that reward yourself as well, because sometimes you think, what's the difference? I say $1,400 here, it goes on the mortgage. My life doesn't change too much, but add that.
Oh, and my gosh, it all adds up. Yeah, you do that across the board with all of your builds. And you know, one of the really good places to start too is with your existing providers. So compare and see what's out there, and then go back, you know, if it's your home loan, for instance, go back to your current home loan provider and say, hey, I've looked at the market and I can get a rate that's, you know, X% cheaper. This bank is willing to offer me X%. Are you willing to match it? Because all of these companies have retention teams whose full-time job is to try and prevent you from leaving. So it's always worth asking the question. I've done it a number of times where I've called my bank and said, am I getting the best deal you can possibly give me? And they'll magically be able to find, even if it's a small discount, it might only be 0.1%, which might only be $30 a month, but that's $30 a month that's better off in my pocket than in theirs. So it's always worth asking the question. And actually on Finder, and afterwards we can send the links to this, but on Finder we have some scripts that we've created too for people to help them, particularly with their home loan, to know exactly what to ask. So you call and you say, hey, can I please speak to the retention team? These are the questions I've got, and we kind of walk you through the process so that you know exactly what to ask for.
That's right. I mean, the cost of living crisis is, you know, it's affecting, you know, the banks and lenders and insurers as well. And, you know, as Sarah said, it costs a lot more to get a new customer than to retain one who's already, you know, happy and paying. So you have a lot more power than you think. That, you know, that switching power and knowing what the options are is kind of where it starts. And ultimately, if they say no, then you can go.
That is true. One of my friends just was about to switch energy providers. His current company called and was like, we want to keep you. We're going to offer you a 40% discount on your usage rate, which is amazing. But also, yeah, you're paying a loyalty tax, but right now people just want to keep their companies want to keep their customers as well. So definitely put your best negotiating cap on. But always compare your options first, so you actually have something to fall back on too, and tell them, hey, I'm getting a better rate here. Can you match that or do one better?
I think that part is really key, actually. Doing the comparison is really important, because then you have something concrete to go to them with. You're not just saying, what's your best deal? Excuse me, what's your best deal? You're saying, this provider is prepared to offer me this deal. Can you match or better that? And then also, if they don't do it, you know exactly where you can go to get the better deal.
Yeah, is that the same in the utility space, Mariam? That's apply the same kind of thought process to getting better deals on, you know, telco, electricity, all that type of stuff?
Yeah, 100%. But mostly with energy, because I think you're just paying so much more money over the year. Whereas with your internet or mobile plans, because you've got so many deals to choose from, you don't even need to spend that time negotiating. You can just easily switch to the best deal you see out there.
And I think with energy too, it is, we should like kind of point out, it's a really difficult year. And like kind of in previous years, you were able to, I have in the past been able to call and say, what's your best deal? And they've suddenly found a 15% discount. That's kind of not as common at the moment, because energy is a really, really difficult phase at the moment. So I actually did, you know, I spoke to Mariam and I was like, this is what I'm paying. It went up 17% and she gave me some recommendations. I called my energy provider and said, what's the best deal you can give me? And they said, we're really sorry, but we can't do anything for you. So I was, you know, sometimes the phone call doesn't work, but it's absolutely worth doing, because, you know, the potential to save money is so high.
How do we keep those energy costs down? What's some really high level things we can kind of take away?
Yeah, I think the biggest thing you can do is compare your options and move to a better deal depending on how much energy your household uses. And then there's really small things that can make an impact in the short term as well. So for instance, if it's winter, then you know, make sure your doors are closed when you're heating up a room so that the heater is not using too much energy. Make sure you look at energy efficient appliances as well around your house. If they're not energy efficient, they're just going to be guzzling too much power and you're going to be spending too much money. So it could be expensive in the short term to make that transition to a more energy efficient appliance, but it'll you know, save you money down the line as well. And then other small things like, you know, don't overload your refrigerator so it's working too hard. And there's this like common misconception that just because a reverse cycle air conditioner is just bigger, it'll use more energy. it's actually more efficient than even like a small heater that you'll have in your room, for instance. It's got cheaper running costs. And yeah, there's just this myth that it's just going to use up too much power and energy.
Maybe because they used to, 10 years ago, they were these giant guzzlers.
Yeah, and I think that's why
efficient.
it's just getting that information as well, and then taking pure hot showers. Keep them at don't stretch them to 10 minutes. And yeah, just our Australian homes aren't known for being well insulated. So whether it's like getting snake rugs or just closing your curtains when it's super hot outside, so you can keep the indoors cooler. Just small steps. And switching off your appliances by the wall. So even stand-up power can take up energy, and it could save you $100.
Yeah, I think we did some research into that, and it's about $130 a year just by switching, your TV off and things like that, those little power leaks. So, just turning things off, particularly if you go on holidays and things, turn those things off. But it's just really about being mindful and thinking about these things so that you're making these little tweaks that can actually have a really big impact.
Don't turn off your fridge.
Not your fridge, yes.
And then I know someone who did that and had many regrets.
Yes, not your fridge or your freezer.
Did you say a full fridge, it uses more electricity if it's over full?
Yeah, it does, because it's using more power to keep your food cold. Keep it cold.
In fact, if you've ever had your freezer switch off, or trip the power, it's possible that you've loaded it up, or you've made it work too hard.
Yeah.
Everyone
has their limits.
I know during lockdown, I did my best to keep the fridge empty, so that was a win for my electricity bill. Apparently, maybe not the waste of one, but did well. I know too. I think years ago I read or heard somewhere it's like $6 or $7 for every load you put in the dryer or something. Madness.
Yeah, the clothes dryer can be a tricky one. So if you see the sun shining, do your laundry and hang it outside. I just moved to a new apartment, and I don't have a clothes dryer yet because they didn't get one, but I've saved on my energy bill. So I could tell that it was really adding up to the costs.
And I live in Queensland, and I have never had a dryer because we have so much sun. It just feels wrong to me to have a dryer up there. I can get a load dry in 45 minutes in a hot day.
Oh, wow. All right, everyone listening, just move to Queensland. So much money.
Housing is cheaper too.
Yeah, that's true.
Lots of benefits.
One of the questions that comes up a lot, and it's it's really hard to think through an answer, but insurance, insurance is generally good to have for those kind of what if scenarios, but far out, it can be a leak on the budget when some of those premiums go up. What's your thoughts on that, Taylor? Keeping insurance while things are just getting expensive?
Yeah, so it really depends on the insurance. So if you're talking about pet insurance, for example, do you want to have that decision between your pet or your bank account? My dad kind of said, like if the dog got sick when he was growing up, they just got a new dog, and that was, and it was a much different relationship than the way that most people, carry their pets around in baby carriages and stuff like that. So that's one consideration. But when it comes to something like health insurance, it really comes down to, how much you make and how old you are, just as a no-brainer. So if you make $90,000, then you're essentially going to be paying a tax for the insurance anyway. That's going to cost more than the insurance. So it's a no-brainer there. And if you're coming up on your 31st birthday, for every year that you don't have private health cover, if you end up taking it out later, you pay 2% more. So even getting a discounted policy and keeping that continuous, will save you money in the long run, not to mention all of the other benefits of being able to pick your own doctor and jump a queue if you need elective surgery and that sort of thing. And then car insurance, there's obviously some that's compulsory, just to make sure the other drivers are protected. But there's a certain amount of cover that you want to have when you're driving around, just so, again, if you happen to run in, you get into an accident, it doesn't bankrupt you.
Yeah, I think something that Taylor said then that I think is the really key way to look at it is what is the risk you're trying to insure? And the pet one it comes to mind for me because I had a family member with a pet who didn't have much savings, and I said to her, please get pet insurance, and she was going to and didn't, and then the pet, he ate something, I can't remember exactly what happened, but it was a $1,400 pet bill, and she was under so much financial stress to cover that he was only 6 months old. There was no question whether he was going to get the treatment, but it just became very, very stressful for her to pay for it, and so she obviously straight after that went and got pet insurance because that $10 a week would have taken so much financial pressure away. So I think it's really worth looking at in terms of that question of, is this a necessity? You have to ask yourself a few hard questions. If it was, for instance, your car, in my view, third-party insurance is a no-brainer because I don't want to hit someone else's Porsche and then be bankrupt because I can't afford to fix it. So third-party, I think you should absolutely aim for that if you can. But comprehensive insurance beyond that, if you're in an accident and your car was written off, would that impact your life? Would you still be able to get to work? Would it really kind of derail your life? Then maybe that's an expense you should be really, really trying to keep on top of. Health insurance is something, it's highly debated in this country. We have a pretty good healthcare system, a little bit different to your home country. Yeah, right. We have a pretty good healthcare system. You're very likely to be looked after in an emergency here. So depending on your personal health and values will dictate that decision. But I think if you were looking at something to cut, you might be looking at, well, I wouldn't be able to afford to pay for my pet, and I would really lose my job if I couldn't drive to work. But if I got under, a lot of significant stress with my health, I could possibly do it in the public system. They're very difficult questions, but you have to kind of ask yourself them so that you can work out and make the most informed decision for you. And, the three of us sitting here would all probably make different decisions based on our own lifestyle and values and our families and all those kinds of things. It's a really personal and individual decision. But you really have to ask yourself those questions, ideally before you go and cancel the policy. And then, it's always Murphy's Law that you'll go cancel the car insurance policy and 2 weeks later rear end someone, so have a real think about those questions and how you would cope, what your plan B would be, just so that you're kind of preempting that stress, because those things happen. It's impossible to go through life without those things happening at some point or another. And these insurance is really about trying to protect yourself from those risks.
Yeah, and we get asked that a lot. Like, what's the best? What's the best health insurance, or what's the best energy provider? What's the best credit card? And the really answer is there really isn't one. It's like saying like, hey, when you cook, what's the best knife in your cutting block?
Or what's the best pasta dish? We would all have a different answer because we all have different
circumstances, everything.
And particularly when it comes to financial products, you really have to assess it based on what your personal risks and your beliefs and your values and all of those things come into it. But the bottom line, and the thing that really does ring true for everyone, is that the more informed you are and the more that you kind of engage with this stuff, the more power you have and the less stress you have. And I have this conversation with friends all the time who are similar to that. They'll be like, I need to change my home loan. What's the best one? And then I go through all the questions. Well, do you want a fixed rate or a variable? Are you going to sell in the next few years? Do you think you're going to hold it for a while? Are you planning to move? Like all of these questions that go into informing that decision. But, I had this conversation with a friend recently who was talking about all of these things, all these cost of living pressures. And, she was asking for advice on certain things. And it really does boil down to where you stand on some of these things and what your kind of biggest stress and pain point is. And for some people, it's going to be different for everyone, I guess, is the answer. So the best thing you can do, though, is engage with it, because the more that you put it off and, put your head in the sand and go, I'll deal with that. Or sometimes we don't really want to know the answer because I don't want to know exactly how far behind I am on my phone bill, or I don't really want to know, how hard it is going to be to get back on top of that. So we avoid it. And that's really the worst thing you can do, because then you end up really, really stressed. You can't sleep at night, and those financial pressures don't go away without attention.
This reminds me of the, sorry.
Right, go on.
No, I was just gonna say this just reminds me about the lazy tax on energy. I know we did some research and found that I think some people put it off and they're paying an additional 100 and something over the quarter. Yeah. And imagine if that keeps adding up, that's 400, about 400 in a year, and then 800 in 2 years. So yeah,
that's money better off in your pocket than theirs.
With just to summarize, I guess, the insurance one. So it's really having a look at, can it provide you better cover than, our pretty decent Medicare system here?
Yeah.
I think Taylor mentioned that 90K is around that mark where you get that extra Medicare levy where, it's going to cost you anyway. So it may as well be some advantage to the private health.
Look at your options. Yeah.
And you're just accepting that you've turned 30 and you've said goodbye to your 20s, and then they hit you with another premium, like kick you when you're down.
Yeah, that's right. Well, and the other thing to consider with health insurance is most states, ambulances are not covered by Medicare. So, if something happens and you need to call an ambulance, you could, depending on how far the ambulance has to travel, you could be stuck with a big bill there too. So that's
another reason to move to Queensland.
Yeah, exactly.
We do have it covered there.
Oh, really?
The other thing that I think is really important with insurance is this is one of those areas where the difference in price is just absolutely massive. And that's because insurers all price their risks really differently. They all have different policies. And I was just doing this yesterday with one of the guys on our car insurance pages, and we were looking at the averages from the lowest to the highest for an average car insurance policy for a year, and the difference was over $2,000 between the cheapest and the most expensive in the market. So that really shows that if you're just kind of paying your premium every year and you're not really paying attention to it, you could be paying so much more than you need to. And this is the exact same product. The way that I kind of think about it is, imagine this jacket. If you could buy this jacket from one shop for $50 and from one shop for $500 for the exact same thing, you want the $50 one. And with insurance, it is possible to compare apples for apples and have the exact same coverage, the exact same excess, but pay less for it. So it's one of those areas where there's a huge potential to save money.
Yeah. And it varies massively by state and
Yes.
by, even locale in some places.
And even your age, very randomly. Like when I redid my home insurance, I put my name down on the policy. When I put my husband's name, the premium changed because he's a few years older than me, and the policy changed. I can't remember if it went a little bit higher or went a bit lower. But even, your age can actually impact the price that you pay. So it's just like all of those things go into it. So it's such a good place to start. If you're looking at somewhere to start, basically, on reining your bills in, insurance would be one of the first ones I'd look at.
Yeah, $2,000's massive. That's a huge difference for the same.
Even
product.
we were surprised. We look at this stuff every day, but even we went, oh my gosh, that is a big difference.
Yeah. So we've covered cutting the costs and expenses. The part that I find more exciting, because there's kind of a limit where you get to, right? You might only be able to cut out $3,000 or $4,000 per year, which is still phenomenal, but you can't go to zero with cutting out your expense. You do need to have costs of living and eating, which is also recommended. But increasing your income, having more income coming in, that's almost unlimited. How can you go about increasing your income or having more money come into your bank account?
Yeah, absolutely. We've actually got a really good article about this, which I will make sure that we send out to everyone afterwards. And I think it's something like 51 side hustles to make extra money. And it covers a full range. I mean, some of these side hustle things you would have to put a bit of time and energy into. Some of them are things like, renting out a spare room in your house. That's a big lifestyle decision. Some of them are, or a lot of people have car parks that they don't use that they could rent out and make a good amount of money on. And then there's all the things like Uber and those types of share economy things that can help you make a bit of extra money. But the other thing is with your own job, now is a really good time to be asking for a pay rise, just because it is a very, very tight labor market. And what that means is there's just not enough people to fill the roles that businesses need filled. And my big advice here is just to kind of present a case. It's you don't want to be emotional, and you don't want to kind of complain or it's not fair and I deserve more. All of that kind of stuff is not really going to get you a good outcome. It's more about demonstrating your value and kind of saying, I've put in this effort and these are the results I help you get. And I think I deserve more for that. And you have no idea. I guess this is similar to what we were talking about earlier. You have no idea what the reaction is going to be. It's going to be dependent on the business itself, and your boss, and what situation they're in, and all of those things will go into it. But you've got to ask the question, because there's no harm in asking the question, and you never know what you're going to get as a result. But it's a good conversation point. If you ask for a pay rise and the answer is no, then I would be saying, well, what's the next opportunity to talk about it? If it's a no right now, can we revisit this in 6 months? And if all of that all kind of falls in deaf ears and you're really not happy with the result, then have a look out there, because it's a very it's a flourishing jobs market at the moment. So there's lots of opportunity out there.
And we were looking at the research, and men are much more likely to ask the question and much more likely to try to step into the role before they're ready to, or women are more likely to be fully qualified before they even ask. So take that as take that for what it is, and make it yours.
Yeah, it just I think if you don't ask, you won't get. So it's just a conversation. It's it's only as difficult as you need to make it in your head. So if you can just kind of find a way to go, the next 5 minutes are going to be awkward, but I'm going to ask for this and see what I get. What you get could be a great pay rise. So it's absolutely worth having that discussion. Yeah.
Employers, just like everyone out, the cost of retention and the cost of getting a new employee, that all that stuff, it's all the same. So it's interesting for us to be having both the conversation of how you save on your bills and how you save on with your employer or as an employer, or it's all in the same.
And at the moment, I think you have to pull every lever you can. That these costs are going up. It's difficult. No matter who you are, you can't avoid them. So look for every opportunity. Try to bring your bills down and try to bring your income up. And every little bit counts. I was just having this conversation with someone on a plane the other day, actually, where he said himself, he's like, I pay convenience tax because I never look at my bills, and I never bother looking at it. And he had a little girl with him. He had his little adorable 5-year-old. And I said, well, imagine if you were saving $100 a month, because he goes, it's so much work and da da da.
Yeah.
I said, it really doesn't take that long. Imagine $100 a month, what you could do with her. You could take her to the aquarium, you could go to the movies, you could take her out, all these things that you could do with that saved money.
Yeah.
And he's like, oh, when you put it in that context, I'm really annoyed at myself. Why haven't I done this sooner?
Yeah. Or what that $100 a month would be if you put it in a savings account, or
or if you're like struggling with your bills, just that stress that to be able to know that you can pay your rent or your mortgage or your bills and not be falling behind is, that is a gift in itself. So anything you can do to work towards that goal is really big.
Yeah. And we talk a lot about saving money, and that's obviously a huge key when you're getting any of these products, but it's also, it's not necessarily a race to the bottom in every case. Like there's a lot of times where you get more value when you pay a little more. And so we try to separate the wheat from chaff, with all of the pros and cons, and all of, we do customer satisfaction awards, and we do, our own internal awards. So we're really trying to pick not only the products that might necessarily be the cheapest, or, give you the best return on your money, but also the products that have the most features and things that you really want. So it's really dependent on what you're after.
Yeah, I think it comes down to best value. What is going to be the best value for money, for a range of different people. And people like Mariam and I, we work at Finder. We are like literally deep in the weeds of all these things. We're reading through product disclosure statements, and we're, kind of looking into the detail of all these things to try and make sense of them and help people work out what the best option is going to be for them.
Yeah, because sometimes you just don't read the terms and conditions, so you don't know what the hidden costs are, or the extra fees that even differ between one provider to another. So we do the hard work.
We do all that for you.
I do have to ask, because it's killing me. This person that you spoke to on the plane, did you know them, or are you just out there hustling amazing for everyone?
Yes, I was hustling. No, I didn't know them at all. We just got talking, and he said, "What do you do?" And that led into the conversation.
Cool.
I'm always looking to help people. It's in my blood.
I do like that though. What else can the $100 do, rather than think of it from a deficit point of view? Like if you imagine ringing up saving $2,000 on your car insurance, that's and
when you add it all up, it's all very incremental. But if you were able, we were talking about phone plans a little while ago. We're doing some stuff on phone plans, and if you move from a like a Telstra or an Optus or one of those really big brands to maybe a lesser known brand who has a better value deal going, you could save $30 a month, which in itself you might not think that's a big deal, but that's $360 over a year. And you don't forget that you pay tax on the money you earn. So you probably have to earn, $400 or $500, pay tax on it to be left with $360.
Yeah.
You times that by 5 bills, and that's a couple of $1,000s a year that you have in extra money. So it's, it's really powerful when you kind of apply it across the board.
I think let's dive deeper into the pay rise part, because and if my staff can put themselves on mute for the next 10 minutes. How do you come up with that figure? How do you know your worth, I guess, and go to your boss?
Yeah, I think that's a really great question. And I think the more data you have, the better. You know, like it's kind of not about just going in with a pie in the sky. I want $10,000 because I think I deserve it. It's more like, well, I've looked at the market and there are similar jobs being advertised for $10,000 more than what I'm currently being paid. And this is the value I bring. You know, this is my job description, but this is where I go over and above to deliver for you. And so this is why I think I deserve it. It's kind of a you know, it's a negotiation, but it's also just it's a information exchange. And if you're going to be able to prove to your boss that I'm delivering good value and I'm a really good asset, and this is why you should reward it, you know, you're giving them actual data to work with. So they can't just turn around and say, well, they could, but it's more difficult to just turn around and say, budget says no, we're not doing it. If you've kind of given them a really good argument, you can, if they do say no, you have a bit more of I guess a bit more weight to throw around to say, well, I did point out A, B, C, D, you know, I saved the company this much money, or I keep the wheels turning. You know, it doesn't matter what your role is, no matter what you're contributing to the business's greater goals. So, you know, even if you're not in a role where you can demonstrate, well, I saved you this much money or I made you this much money, you can still be saying, you know, I turn up to work on time. I rarely take, you know, personal leave beyond, you know, sick days that I'm entitled to. I give 110%. I'm always turning up early for my shift. I'm very reliable. Like, just kind of reinforce all of the reasons why you're an asset to have there. And see how that conversation goes. And, you know, it really depends on the workplace and the people. I went to a really incredible conference a few weeks ago, and there was a speaker who was talking about this exact, this topic. She talked about negotiating your salary. And she said in some workplaces it can be a bit toxic, and you just get a no, no, no. And then it becomes a really personal decision about, do I want to keep going here knowing that's been a roadblock of a conversation, or do I want to look at my other options? You know, it really depends on the workplace and the kind of response that you get. But I think having these kind of conversations and working out what you want, you know, it's always going to be, in my view, it's always a good thing. There's no reason not to have these conversations, because you're not going to be any worse off than you are now from having had that conversation.
Yeah. And I think when you're thinking about pay and stuff like that, it's also to weigh up, you know, just like we talked about in all the other financial products, what are the other benefits that you get from the job? Like, you know, if you could get 10,000 elsewhere, you know, are they going to still have you know, you're still going to have the same entitlements and the same.
Can you still work from home?
Yeah.
Are you going to have to commute? You know, weighing up, that's going to cost me an extra $50 a week, or, you know, the lifestyle side of it. And there's a lot, particularly our jobs, you know, we spend so much of our time there. You want to enjoy it too. It's not a pure financial decision. There is a lot that goes into it.
And it's similar to a financial product too. You could be looking at the lowest, you know, the lowest rate on the market, but you know, what if you have an issue? How's the customer service there? And that sort of thing. So it's not always just a, you know, race to the top, race to the bottom, although that's what, you know, in the end, we're hoping to end up as close to the top with getting the pay and close to the bottom of what we were paying.
I think touched on something before, and I've brought it up in conversations around going for a higher paying job, and men in particular. I know I do it if I'm looking at a job. If I can do 2 out of the 10 things, I'm like, I'll work out the rest later on. But for women, they need to be able to do almost 10 out of the 10 things. Do you have any sort of advice or information around, I guess, building that confidence and putting yourself out there for higher paying jobs?
Yes, I'm so passionate about this. We do a kind of, every year we do an International Women's Day report at Finder, where we gather all the latest data about this and look at the gender pay gap and all of that stuff. It's very, very informative. But you know, I just think so much of this comes down to self-worth and confidence. And the way that I guess one of the ways that I put it is, you know, at Finder, I'm a media spokesperson, which is a really fun role, but, you know, it takes you a while to build your confidence in something like that. I never go into anything thinking I'm the smartest person in the room or the most informed or the best person to talk about it, but I have just as much of a right to be there as anyone else. And if you have that view, it kind of takes the pressure off yourself. You don't have to be the best at anything, but if you can give it a go and give it 100% of what you can do, then you should be aiming for the stars. And there's no reason why you as a woman don't have just as much right, and particularly for minorities as well, you have just as much of a right as anyone else to be there. So, you know, the world should be your oyster. Look for what you want and don't self-limit, don't block yourself. And if you start to have those self-limiting thoughts, like, get them out, look at them factually and go, yeah, there's no reason for that to happen. Anything else?
Yeah, no, it's just about taking a chance, right?
Yeah.
What's like, people get rejected, but I still think they'll help you develop a bit more, get you some points improved down the line than not having anything to go with at all. So
absolutely.
yeah.
And try. No one ever, you don't become a CEO of a company because you become a CEO. You become that because you have taken these difficult steps, put yourself in difficult situations, been uncomfortable, pushed yourself and grown and gotten the confidence to take the next step and the next step and the next step. So just keep putting yourself out there and you know, you particularly see it in women who have left the workforce to start a family and then they come back and their confidence is knocked. And, you know, you see that a lot with women where I'm like, you're an incredible person. You've got so much, you know, you look at your career history, you've got so much that you've done and so much you've contributed. Just because you've been out doing the very difficult job of raising children for a few years doesn't mean you should be, you know, accepting anything less than what you deserve and you can contribute. So you should be valued for that.
Yeah, and in a lot of ways, you know, having that experience is more valuable than, you know, having been in the role for that extra year or two. Like, you know, you've made literally life-changing decisions on a day-to-day basis without consulting anybody.
Yes.
So, you know, whether or not we, you know, run the report now or next week is a decision that you can handle. But yeah, I've heard a lot of people talk about this in terms of like, you know, hunter-gatherer days and you know, the men having generally that you know, go out and, you know, hunt for food, and the women having
provide
more of the, you know, setting the scene at home, and how that's kind of just continued to seep into to everything. But I think now we look around and we go, right, you know, most of the time, you know, if you look around, is it the guy that's making the smartest decision or the woman that's making the smartest decision? So I think there's definitely a fair bit of confidence that anybody should take into that kind of a conversation, and I think it's empowering just to know that this is how it is. This is what everyone says. This is what the stats are, and you know, make of it what you will.
Yeah.
One obscure piece of advice I got that sticks with me is someone told me to always go for the highest level of incompetence when you're going through it.
That's right. You're right.
That's a good one.
You don't want to do the job that you can do now because you're doing it, but you go to a level where you're just so uncomfortable. And that's really.
That's a good one.
I've heard that said. You rise to the level of your incompetence, and that's where you kind of hit the roof.
And you only get comfortable by being uncomfortable, no matter what it is. Even something as simple as, like, I'm a journalist. My job is in journalism. And when I started out 20 years ago, I absolutely hated making phone calls. It would put the fear in me. I'd pick up the phone and be like, what if the person knows that I'm a fraud? I don't know what I'm doing. I don't know what I'm talking about. They're going to hear straight away that I'm a complete and utter disaster. I had to really quickly get over that, because as a journalist, you spend your whole day talking to people and interviewing them. So, you know, that was something that I guess very early in my career, I could have gone, well, this isn't for me. I'm going to back away and I'm not going to be a journalist because I don't want to make phone calls. Or I just literally had to face the fear. And my very first job was in a very busy newsroom with, you know, open plan, people all around me, very noisy. I couldn't squirrel off into an office and have a private conversation. I had to do it very publicly. And then you really quickly realize, like, nobody is thinking or cares about you the way you think they are. They're too busy caring about themselves to look at you and go, oh, she's not doing a very good job of that. Like, so when you take all that pressure off yourself, it's incredible how much more enjoyable life becomes.
It's that imposter syndrome that everyone's always dealing with. And you overthink things, but nobody else is thinking that. Like, oh, you missed something. And you're like, oh my God, how could I have done that? And you think about it for odds and odds and odds, but it's long forgotten by everyone else.
Yeah, because they're thinking about the thing they did.
It's funny. We do have one comment in the chat talking about going to smaller mobile phone providers. Someone said we've done that twice and had really bad connection and I guess reception for their phone. You know, the essential reason you have a phone. We still haven't managed to master that. We can do everything else on it. So yeah, I'm not sure if that's whether a comment or it's just coming back to that value proposition that you may get cheaper, but you know what, you probably can't call someone when you're in the CBD.
I think it again depends on just comparing your options and where you live as well, because that plays a huge role in who you go with. So you don't have to go with Telstra, Optus, or Vodafone as even if they're bigger providers. You've got say just a smaller provider like Boost Mobile, right? It's got full Telstra coverage, and if you live in regional Australia, you still get really good signals. And so it's just looking at comparing your products and looking at reviews as well and seeing which coverage is best suited to you. And sometimes also just testing it out, get a cheap phone plans and see if it works. If it doesn't, just switch to the next one because you're not locked into a contract either. So really,
I was just going to ask, is there a cooling off? Like if you did do that, moved from say a Telstra to someone, and a week in you're like, this is not working, can you?
There's no cooling off because especially if you're with a smaller provider and you get a prepaid phone plan as well, you've paid for that month, but you could test it out for, you've got like 1 or 2 day plans as well, which could cost you a couple of dollars, so you could easily just.
So it's a pretty easy thing to test.
Yeah.
I've talked about this to Mariam many times because I've been with, I can't remember, Vodafone or Optus or whatever for years, and I was like, but they're the best coverage, and she was like, we need to talk. Because there's lots of options. There's lots of options that, like she just said, are powered by Telstra or powered by Vodafone. So it's literally the same coverage. It's just badged differently. But you're going to save money, so it's worth looking at.
Yeah, it just depends on which smaller provider you end up with. They're not all the same. So just about doing a bit of research,
which we can help you.
Yeah.
I think final few questions, we might go into that, just quickly talk through what if we get into a bit of financial trouble. So, you know, you've just opened your bill, or you've, you know, whether it's email or, you know, your paper bill, electricity, and it is massive. Like it's overwhelming and you can't even fathom that amount. What do you sort of do when you get that bill shock?
So let's assume you've got an energy bill that you think you're going to have trouble paying for. So every energy provider is obligated to have a financial hardship policy. So just give them a call and find out what options they have to offer you. So it's likely going to be a case that they'll tell you if you could pay over small installments over the course of the year. Make sure you agree to a payment sum that works best for you. They'll also put you in touch with your local energy ombudsman. They'll give you the contact details to see how you can get further support. And they're also obligated to tell you if you're eligible for any energy rebates and concessions from the state government. So there's plenty of options, but I think it just all starts with calling your provider and they give you all the details you want.
It all starts with a phone call, right? Yeah. And that same thing applies with home loans. And I think this is the really scary one, that people don't want to contact their bank and let them know they're in financial trouble because it feels the stakes feel very high. But banks have really similar kind of regulations where they are what do you call it? They are motivated to help you get back on track. And the sooner you can do it, the better. So if your financial situation has turned, say that you're in a 2-income household and one of you has suddenly lost their job unexpectedly and you don't have savings and you're suddenly under a lot of stress, you're best off contacting the bank pretty quickly to say, this has happened and we're under stress and I'm very actively looking for another job, but right now, what are the policies? Can I get a mortgage hardship program? What am I eligible for? Sometimes you might be eligible for a mortgage repayment holiday, which happened en masse during COVID, where about 1 million Australians took a repayment holiday for 6 months. And a repayment holiday is exactly what it sounds like. It's a pause on making repayments. So it takes some pressure off you. You might be able to move to a lower rate and get your interest rates come down a little bit, and then your mortgage repayments come down a bit. But kind of if you're in a financially stressful situation, look at all of your bills and just look at where you can cut and who you need to talk to kind of get things back on track. And if you're really stressed and struggling, there's the National Debt Helpline, which does a really good job of helping with financial counselling and helping you kind of get back on track with everything.
Yeah, and you mentioned the mortgage holiday, and it is 6 months of kind of pressure relief. But it's also important to know that the meter is still kind of running in that 6 months. So it's definitely something you want to look into as
you're gonna have to pay it eventually.
You will have to pay back a little extra in interest, but if it helps you out right in the time, then it's a good way to go.
Yeah, exactly. They should definitely be used as the last port of call, but if your situation dictates it, it can be really useful.
And what are some of the things you really shouldn't be doing if you're getting in that bill shock? Like, what's some of the decisions people make that really get them into a bit more trouble?
Well, for me, that one of the worst is taking out the the payday.
I think we're all going to have the same answer
here.
Payday loans.
Using buy now, pay later to pay for your everyday expenses. That you're not sure that you'll be able to pay back, because the fees for using those products really add up quickly. And if you're in a state where you really need some short-term help, Sarah said, most providers are not only obliged to do so, but in many ways required to do so. And again, they want to keep you around as much as they can. So there's also options to get short-term loans if you are on a low income, or if you have a concession card, and you need $1,000. There's a program. I think we'll put that in the doc afterward too. But so in general, I mean, a payday loan could really help you out of a bind if you had to use it, once in a blue moon. But you just know that you would be paying a lot for the privilege.
Premium. Yeah, and they should be. I think that the difficulty comes when they become something you rely on again and again. And those types of products are designed to hook you in and get you reliant on them, and then paying extraordinary fees on them. And it can feel like a solution in the moment because you've kept the wolves at bay for right now, but it is a very, very short-term solution. If you have to do that to just, keep your head above water, then you do that for the short period. But then you need to do all those other things we've talked about, make the phone calls, get into some hardship programs, work out some payment plans so that you have a longer term solution, because these payday loans and these very quick finance things, they're a short-term stopgap, and they can compound the problem exponentially if you end up paying all these whopping fees on them.
Right. I mean, if they're a bridge between you and when your next payday is coming, and you need to draw on your pay, with a before pay or a short-term loan like that, and it's a one-time thing.
It's a one-off. Your dog has had your dog has been injured.
Nowhere else to go.
Yes.
And we compare those for that reason, but in very bold strokes say this should be your
last resort. And
Mm.
that's, I think, the real key differentiator there. If you need something to help you over a very short-term hump, they can be useful. If you are in ongoing kind of chronic financial stress, then something's kind of broken, something's not working right, and you need to have a more holistic approach than a quick stopgap.
Yeah, beautiful. Gonna wrap up. I'm going to give you each one sentence. Tell us your best financial tip and why you're thinking of that, because I put you on the spot. James just also put in a comment around no interest loan schemes, nils. It's capped at $3,000.
Yes.
There you go.
And that's one of the things we'll send out in the docs. But if each is one sentence to summarize a tip from today, or in general, what do you got?
Oh gosh, that's a good one. Is anyone ready to go?
Well, yeah, I would, if I had to wrap it there, if I had to put it in one sentence, it would, pretend that you're a player when it comes to your finances. Work the field. Don't settle down. Don't be loyal. Keep your options open. So yeah, that was more than one
That was
sentence.
very good.
Yeah.
That's just your finances.
That's right.
Yeah,
Be a financial
purely
player.
finance.
That's right. Purely financial. Be very
Mine
loyal
would
to your
be,
family.
I'm inspired by you, Taylor, there. I don't have quite as pithy a response, but mine would be that a budget is your friend. And I think a lot of people shy away from a budget because they think it's going to show them how bad the situation is, or, how dire their bills are, or all that, all those negative things. In my view, a budget is a really positive thing because it gives you information information. And when you have information, you can then take action. And when you don't know what you're dealing with, like it's impossible to know if you're paying too much for your home loan or your energy or your phone bill if you don't know what you're paying and what the other options are out there. So, you know, really look at your bills and your budget and get a really good plan in place, and it can be your best friend.
Nice. I was just gonna say, don't shy away from looking at your bills, even if you've got direct debit set up. But I think especially for utilities, compare your options every 6 months. Like I stand by it. I would have said 12 months before the cost of living crisis, but now every 6 months, just spend a day, compare your options, and find a good deal around, because there are loads, especially in mobile and broadband.
And the return is just going to be so worth your time. You know, a few hours of your time and you're almost guaranteed to save money. So it's such a good proposition.
And I think my one is just move to Queensland. Seems to.
I can vouch.
Well, thank you so much, Sarah, Taylor, and Mariam. Really appreciate your input, and I think everyone got so much value from that session, and a lot of homework to do and money to be saved.
Yeah, so make sure you plan something fun after your homework. It makes it more fun.
Beautiful, will do. Thanks, everyone.
Thanks.
Thank you.
See you.